Today, I'm doing the Hamilton and Grimsby market update with Abdellah from Rebel Realty. So Abdellah, what's going on in the market today?
It's still a little hit and miss out there. It's starting to pick up, and then to me, it's like kind of picking up and then, kind of flattening out, and then it'll pick up again. For the investor side, there's still a tremendous amount out there. Some more deals that we have available through our team. This one is in the lower east end of Hamilton. It's a new build project. The foundation still exists, but site plan approved, permits are in hand, ready to be transferred, asking $425,000. It's zoned R1, so it's even more developable to a fourth unit. Average rent, 1 bedroom here in the last 30 days has gone up 5%. We're at $1,705. It's down a couple percent from last year. 2 bedrooms are at $2,130.
It's just more sales, more inventory. Rates are coming down. We got deals. It's all shovel ready. That's what we're talking about here. That's all you brought today? Welcome back to the Canadian Real Estate Channel. I'm your host, Adam J.D. Martin, and today I'm doing the Hamilton and Grimsby market update with Abdellah from Rebel Realty. So Abdellah, what's going on in the market today?
Adam, how are you? Hey, market still a little bit up and down in my opinion. Still got some hurdles here, but let's dive into some more information here for the viewers, shall we?
Yeah, let's do it. It sounds like on the numbers update you were talking about sort of inventory being up and sales were kind of up and months of inventories just sort of kind of being a little bit flat. So I'm really interested to see like what you're actually experiencing on the ground. Like I know you've got a team around you. And so I think it's going to be useful for everybody on the channel to understand like what's the difference between what you're actually seeing every day and the stats that we get to see once a month.
Yeah. 100%. Yeah, I think it's super important to, kind of differentiate the two on the macro side, right? The stats are what they are. That's, doesn't ultimately give you a clear indication of what's going on. I think we're the best indicators in that sense. As full-time realtors, I kind of live and breathe the business. From what my team and I are seeing, we come from the world of prospecting at a high level, right? Whether it's cold calling and door knocking, in addition to kind of the new age way of doing it. But I think, it's still a little hit and miss out there, regardless of these fixed rates coming down, which seems that nobody's paying attention to. They're down, almost 150 basis points with some lenders. But we know, right, historically, the majority of the population are going to lean towards the variable rate, and that's clear as day that we definitely need some movement there, to give us our next jolt. I look at it as like it's compartmentalized, right? It's you've got a block of consumers that have already come out and have taken the advice from their broker or advisors, whoever, that okay, let's not wait, let's get into something fixed for a 2-3 year term, and then we know we can ride the variable rate down at a later date. And I've had multiple of those conversations with recent buyers and sellers, and just kind of given my 2 cents. Not that I have a crystal ball or anything, but we've seen those consumers come out. Just recently, just our team with clients in our database that are reaching out and be like, hey, look, I'm making a move. Looking to make a move in the spring and their summer. At the end of the day, people, the sales activity is slowly going to come back, right? The natural way of real estate eventually has to come back. People got to move. Some people have figured it out or have moved out of province, whatever the case is. But I think leading up to this first rate cut, at whichever point it may land during the year, I think is when you really see an uptick. But we started seeing that at the beginning of the year with the first rate hold, and we kind of, it's just the energy and the conversations that you have with clients that you're nurturing, right? And it's starting to pick up, and then to me, it's like kind of picking up, and then kind of flattening out, and then it'll pick up again until eventually, I think it's still going to be a considerable amount of time before we're in a traditionally balanced market. So I think it's still a little hit and miss for the investor side. There's still a tremendous amount out there. Just us in the last few months picking up, deals that we've shared. These are numbers that will work in this market, and then those investors are going to have the luxury of almost built-in equity with these inevitable rate cuts, right? So we're still seeing some solid deals out there. It really comes down to research, right? And me as a realtor, when you're looking, it's funny, when you're looking at the MLS on a daily basis, the amount that we do, these super stale listings just go by the wayside, right? Because you're looking at stuff that's a little bit fresher, maybe a week or two on market. And just recently, something that we put conditional under contract that was was on the market 3-4 weeks, which is completely normal, right? And you guys saw the average days on market on the stat sheet, but something that kind of flew under the radar, and it was weird because it's a mighty deal. Triplex conversion on a 13,000 square foot lot. Client will be able to do a 4th unit in the basement, and the way the Hamilton zoning is ever changing, possibly a 5th or a 6th unit. So that's been my focus, right? Is really, like, to me, it's just logic. I would not go buy 2 lots when I could buy one and intensify it on the same lot. Like, it's in terms of qualification and worrying about a new mortgage as opposed to a refinance, it's a no-brainer. That's my personal opinion. That's the best way to attack, especially in the Hamilton region.
Yeah, I think that makes a lot of sense. And I think there has been generally a shift in demand for investors to really be looking at value add projects. So that's intensification, that's adding bedrooms, that's like truly adding value in a sense that like you're bringing a building or a property up to its highest and best use. And the understanding that it's not 2021. Like, you can't just buy a house and have a 30% raise in purchase price when you go to sell it in a few months later after you paint it. Like, it doesn't make a lot of sense. So I think this has all been a very educational process for the people that maybe entered the market just prior to 21. And they were like, okay, money just grows on trees and deals are everywhere. It's like, well, actually, not really. Like, you have to find ways to add strategic value, right? Like, we're still doing those fundamentals: kitchens, bathroom, flooring, landscaping, lighting, and paint. But we're also looking at intensification. We're also looking at adding bedrooms. We're adding value wherever we can. And that's really important when interest rates are higher and when there's not a ton of inventory. So you're having to sort of figure out, like, how do I get the most juice out of this thing? And I think that's good. Like, I think that's actually a really healthy thing for the market to slow down and take a look at what we're actually doing as investors. So I think this is all, like, generally speaking, a great thing, right?
Yeah, so it's about pivoting, right? And again, this is why we chat on this channel, is to have the proper advice in your corner. And sometimes it's about being patient, right? And finding that deal. Like, the smaller density just simply doesn't work. It'll eventually come back. But, I don't know many people that are, that have that level of motivation. They're going to be sitting on their hands for the next year and a half. And this is the worst time to time the market, in my opinion. Again, this is very, like, local to Hamilton, and, the abundance of changes in the zoning. It is, I know I talk about it, at redundancy on this channel. It's fool's gold. And I know a lot of municipalities have followed suit, but I think Hamilton's really head and shoulders above the curve.
Yeah, well, and the thing is too, like, people need to be aware that, like, we're trying to find opportunities in these markets. Like, the opportunity doesn't just appear. Like, you actually actively have to seek it out. And in doing so, you end up having to run the numbers better, and you end up having to come up with a better plan. And the idea that, like, the rates going down half a point or something is going to really change the fundamentals of the deal doesn't really add up, right? Because when you think about adding a 4th unit, right, we're talking about adding whatever the average rent is on like a, whatever, the market rent on a 1-bed, 1-bath, or a 2-bed, 1-bath. And let's just talk about that. Like, I mean, what is that? Like $1,800 or something? Let's just call it 1,500 to 2,000. We're like in any market in Ontario.
Exactly.
So a half a point does not matter. Like, you cannot tell me that that half point matters if you can add strategic value in such a fashion that you're actually adding an additional $1,500 plus a month to the investment. So,
yeah,
you know, the whole sitting on your hands thing is really crazy when you actually think about what opportunity is possible if you just expand the worldview to include things like intensification and adding bedrooms and really bringing buildings and properties up to their highest and best use.
Exactly. Couldn't agree more. And we're actually, Adam, we're going to jump into some rental stats as well. So again, guys, we are Revel Realty, Hamilton and Grimsby. So we're up to 3 locations now here, 2 in Hamilton and 1 in downtown Grimsby, expanding the brand, expanding our reach here in the last couple of months. And something that we haven't talked about, and I think in a few videos, are the rental rate trends in Hamilton, which, you know, to me, we were always talking about acquisition and NOI and cap rates and what is this going to be worth? You know, what's the ARV on it? We got to focus on rent, right, and where it's going. I really haven't seen, again, boots on the ground, haven't seen much of a slowdown. I think we're thankful we can move a lot of these leases. And be able to be very intertwined with the rental rates on an intimate level, just with the amount of investors that we're able to help every year. So these stats were pulled from Zumper. We just felt the best classification there in terms of presenting the statistics. So average rent, 1 bedroom here in the last 30 days has gone up 5%. We're at $1,705. It's down a couple percent from last year. 2 bedrooms are at $2,130. Again, this is an average, right? So it's going to vary from neighborhood to neighborhood, and especially in Hamilton where it's very pockety, let's say. Not that that's a standard term. 3 bedrooms we've creeped over 2,600 here. That's mainly on either the mountain or a high quality finished unit. And a long time ago, it got to a point where in Hamilton, with the amount of rental demand we have here, that is one component of a deal that I am sincerely never worried about. I can't remember a time that we weren't able to fill a rental unit within $50 of what we projected. Not to say that's something that we're doing right. We study this stuff, but it's just the influx, of people coming in from Toronto, of course, on the immigration side. So 4 bedrooms, which we don't deal with much. This is more kind of on the single family side, and the Ancasters and the Dundasses and the Flambeaus of the world. You're at almost 2,900, and then your bachelors or your studios are almost $1,500 a month now, right? So in terms of where these numbers were last year, pretty similar. Again, I think they're still the demand is it's one of those things where our tactic, and this the landlord or the investor always has to be kind of in line with us, is got to always overshoot a little bit. We play around the number quite a bit per unit to include the utilities, and that's kind of like the landlord response to all this, right? To where gas especially and the utility rates have come up to, and we're getting a great response. We're not getting many negative reactions where people are up in arms about having to pay a proportion of utilities in addition to their base rent. So if you're speaking to your representatives on a deal, make sure that you're talking about the utility portion, because it can get out of hand. If you're a Hamiltonian, you know what these rates look like, on a duplex, on a triplex, or a quad. And I would urge you guys to think deeper about how to change, work the numbers around a little bit where it still makes sense. To me, I'd rather take a little less on a base rent in order to get my 30-40% on my gas, water, and hydro. That can fluctuate, right? Like take that variable out of the equation. So that's been something that we've been striving towards and working with our landlords and our property management partners here as well. And then now we're going to talk about some more deals that we have available through our team. This one is in the lower east end of Hamilton. So right off of the Red Hill, you can get to the QEW in no time flat. So a corner lot here is 37 by 100 on Grace Avenue. Very mature neighborhood down the street from a popular development that buttoned up about a year or two ago by Lausanne Homes. So the energy in the neighborhood is there. Intensification is there. So this one it's a new build project where the foundation still exists, but site plan approved, permits are in hand, ready to be transferred, asking $425,000. It's zoned R1, so it's even more developable to a fourth unit. Again, permits in hand. Main structure is a 2-story, 3-bed, 2.5 bath, 1,200 square feet, which will yield about $2,300 a month. A legal second suite in the basement, 1 bed, 1 bath at 600 square feet, 1,800. And then it's site plan approved for a garage ADU, 1 bed, 1 bath at a projected 1,700, giving you a total gross yearly income of about 70,000. Beautiful live and rent situation as well. Estimate the build cost at about $500,000. By the time you kind of conjoin those figures, it really falls in line with what the end value will be, and obviously let the rates kind of help out as time lapses here. But definitely not something you'll see. It's rarely offered where it's site plan approved and permits are ready to rock with this type of infill.
Awesome.
And this one just kind of came across our desk recently for the more experienced investor. 45,000 square foot lot on the West Mountain, basically bordering the link here, right to the 403. Zone C5, so allows for medium density in Hamilton. You can intensify that. We've done the homework on that as well. Prime Hamilton location. Businesses, your businesses everywhere up and down Upper James. You're backing onto mature neighborhoods. I think, me personally, perfectly landscaped for purpose-built rentals, which, especially, again, we talked about in the last video, taking advantage of what CMHC has to offer. Rarely offered, the size of it, the location, just you won't see these come up much, but something that's come across our desk and could be available to those who are looking for these, larger commercial developments. And reintroducing this Smithville project that we've talked about in the past, just taking more direct focus on infill and intensification here. Again, kind of being the motif of this video. With Grace and Upper James, and now this project here in the heart of Smithville. So right downtown, already site plan approved, ready for permit submissions. 20 townhouses, 2 stories, freehold with road fees, just like the majority of builders are doing it. This day and age, we have a very comprehensive package available, ready to share with whoever's looking for a site of this magnitude or to partner up. We have those connections here as well in Hamilton. But to me, this is just incredible project. It's in a prime area. It's surrounded by 2 mature complex and a mature neighborhood in the rear. So can't say enough good things about it. All the legwork has been done on the site plan side. There is still the opportunity of further intensifying, whether putting in legal suites or rearranging the site plan. That's not too late on that front. But again, just kind of reintroducing this project, just to kind of touch on the importance and the opportunities on the infill side in the Hamilton and surrounding areas, including Grimsby, Smithville, and those neighboring cities as well. And then
I love shovel ready, eh?
Oh yeah, 100%. Yeah, we've been. To me, it's just I'm starting to see them a little bit more and more. But that one was done with with this purpose, as opposed to somebody that is walking away from a property, let's say.
Yep.
But in terms of dealing with the Niagara Conservation Authority, especially out that way. All those hurdles have been jumped over, and it's ready for permit submissions, but still have the luxury of rearranging some plans on site. Again, guys, are preferred vendors here from top to bottom, used in every deal to get us from the onset to the finish line. And shout out to our friends at Total Property Solutions, who help us with our tenant locates and our property management needs. So one-stop shop, doing it the right way here. And
that's awesome, Abdellah. I really appreciate that.
Yeah.
That's great. Like, it takes a lot of the guessing out, right? Like, who's going to do the construction? Who's going to help me find tenants, right? You guys obviously are bringing the deals and showing us lots of properties, but it's great to know too that you have this whole system set up in the back end.
Yeah, and this is a group of people that have known each other for quite some time. So we've done business with each other. There's rapport there where these aren't just random companies coming together. So there is a lot of internal continuity there.
That's awesome, man. I really appreciate that.
That's all she wrote for the February 2024 market update, Adam.
That's all, eh? Just more sales, more inventory. Rates are coming down. We got deals. Shit's all shovel ready. That's what we're talking about here. That's all you brought today?
Infill, man. We're the infill crowd.
I love it. Well, I really appreciate that, Abdellah. And as always, we really appreciate the updates that you're giving us, because you're really giving us an insight into the Hamilton market. So glad to hear you guys are growing out into Grimsby as well. And we look forward to hearing more about that. If you guys didn't already, go back and check out the actual stats number video that we did with Abdellah, just highlighting real quick, like the actual stats, what's going on in February. And I appreciate you guys staying tuned. Make sure you hit the subscribe button so you can come back. We shoot this every month. Right, every single month we break down the markets and we have this discussion, and every single month Abdellah brings us more deals. It's like actually one of our favorite updates because there's always more deals coming. So I appreciate you guys staying on, and we'll see you guys back here next month.